All right, so now we're going to look at the 5-minute chart here, and I've rung in this candle here, which is the midnight in New York. The opening price, you want to extend that through price action until around 11 o'clock in the morning. If we're bearish, okay, if we're bearish, anytime price returns back to that opening price and we have not met our objective. What was our objective last night? Well, the first thing was those relative equal lows, and then that fair value gap that's outside the range that I'm showing you on this chart, which is essentially around that 1.0705 level to 1.07 big figure. At this time here, we ran up during the London session, running out these relative equal highs. See that? Ran above it, took out buy stops. Why would that be advantageous? Because smart money will take those buy stops and short against it. They will use the buy stops being ran here as counterparty to their shorts. The market drops lower and falls just short of those relative equal lows, which is that line here, okay, at 1.0713 and 2 pipettes. Leaves a fair value gap here and a bearish order block. The market trades back up just before 5 a.m., drops back down, hits an order block, down close candle, rallies once more, takes out this short-term high here, falls just short of hitting that order block, but trades right into that gap right there between this candle's high and that candle's low. Trades right into it. Then drops one more time. Where's it dropping to? Just below the short-term relative equal lows here. And then where does it go then? During the 7 o'clock session. New York time, it rallies all the way back up for a third time after London lunch, and then during the 8:30 window where the news driver comes out, the news embargo lifts at 8:30, and then we run one more time, hit the order block, run the buy stop, and trade one more time above the New York opening price. For my concept of Power 3, I teach that the midnight opening price, if we're bullish, best buys, or the optimal entries for going long, is below this opening price at midnight. If I'm bearish, and you knew I was bearish on Euro yesterday in the last few days, the best shorts are going to occur at or above the midnight opening price in New York time. So you need to have your charts set on TradingView to set to New York local time. And right now, because we're under daylight savings time, it will be UTC -4. That candle right there, the opening price is midnight opening price. We are in Power 3. We're hitting the order block, and we're wiping out buy side, and we're trading above the New York midnight opening price, while the sell side below those relative equal lows on the daily chart that we mentioned last night as an objective, where Euro would draw down into, drawing down to, in other words, it gravitates to it like a magnet. So below this line here is sell stops. Not your sell stop, because you can't probably hold a trade longer than a day because you get nervous. But long-term hedge funds have orders resting below those relative equal lows. So the market, when it went above that opening price at midnight, that offers the opportunity for smart money to sell short there, conveniently allowing the short-term buy stops that the market saw get tripped. This run up here stopped out anyone that was short running there, and then anyone short on this move gets stopped out there. So they've engineered liquidity, buy stops here, so that allowed them to use that midnight opening price. So the algorithm runs up there, allowing smart money to go short. Then their target's going to be what? What I told you last night, the relative equal lows on the daily chart. That's that 1.07132 level. And where does it drop? Just short of this one. Rallies one more time back up into the inefficiency, which is a SIBI. Then breaks hard into that pool of liquidity resting below those daily relative equal lows.